Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 31st of July, 2021. And this is the weekly technical analysis for spot gold and dollar yen for the first week of August. Let's begin with spot gold. And you can see that it's managed to stay above this rising trend line and climb up to test the previous swing high area at the between this 38 and the 50 fib retracement, both on the longer and the shorter term swing. Shorter term swing is in green, so that's the 50 fib retracement area. So that's the 1830 level that we were talking about last week. Let's adjust this trend line slightly to join these lows. Right, and the key was the Wednesday's FOMC meeting. Initially, the US dollar strengthened, but then weakened as the Q&A continued during the press conference, and this gave the other major pairs a reason to drive it up, and it finally broke through the key resistance area at the 38 fib and the monthly pivot, as well as the daily 55 EMA. So that's around the 1813 area. That's the Thursday where it broke through after the bullish close on the Wednesday night. Broke through and tested this zone, and let's that could be a double top in the short term after a bearish close as a dark cloud cover on the Friday, and there could be further bearish momentum, but this zone here is now the key support area, so we'll see whether that's going to hold. And that's at the 38 fib. Next month's monthly pivot will be a new one, and we'll see where that is. So last week's weekly pivot was also around this daily 200 EMA. But the critical support is going to be at the 1800 round figure. And right below that, there's also the 21 fib retracement of this shorter swing. The biggest swing is got to go to the weekly, where it was the high of last year, highest level for spot gold, down to the lows of this year so far, with this double bottom here. So that's the biggest swing fib in blue, and it has basically that's the double bottom for the year, and almost reached the 62 fib, fell back to 21, and then now rising back up to the 38 fib retracement. Okay, so now it looks like a critical area with this is looking to be like an ascending triangle. And we'll see whether it's going to break out higher, and if it does, it's going to test this zone at the 1850 to 1853 area. If it breaks down, then the key support is at 1800. Otherwise, then it can dip to the 1786 level. And one of the key takeaways from the FOMC statement is and press conference is that the Fed is still waiting to collect more data and see the employment figures. So next week's NFP report is going to be a critical one on Friday, and that will determine at least partly where the US dollar is going to move, and after weakening last week, and that will also drive the other major pairs. All right, let's take a look at the US dollar index, the DXY, and how it fared after the FOMC meeting. It had started to dip lower already below this swing high. And now it's become resistance. And it tested the lower bullish trend line. Then on the Wednesday, it did climb up higher initially after the press release, where there was basically no change. Restricted the move up, and once the press conference started, it weakened and broke below the lower channel trend line, and then continued further throughout Thursday down to the daily 55 EMA and the 38 FIB retracement of this swing move. Oops, clear that first. Swing move here. So, and also supported by the daily 55 EMA. So it did recover on the Friday, and we'll see whether that's going to be a sign of consolidation for the week, and likely consolidate until Friday, until the NFP report. So if the dollar weakens, then there is support at the 50 FIB area along with this swing high. If it does recover, then now it's got to break back above the 21 FIB, and as well as these key resistance levels before. All right, so next week will be a key one for the US dollar. After a weak showing last week with the after the FOMC. Let's move back to spot gold and also take a look at the weekly time frame. And it's basically a spinning top and consolidation possibly for the coming week, because the range for last week was fairly narrow as well, about 300, almost 400 pips, but then came back to the midpoint. So that's why it's in an ascending triangle. All right, let's move on to dollar yen. And dollar yen weakened from the start of the week after at the end of the previous week, it tested the lower channel trend line where it fell from. And after initially attempting to climb back up on that Wednesday night FOMC report, FOMC statement, it continued to pull back, then continued lower on the Thursday, and finding support at the 50 FIB retracement. So it dipped lower to test the previous week's low as well, or at least one of the lows where it recovered. So it looks like it has shifted to potentially another rising trend line here. And this has been broken, so we can remove that. So this area is still a key support zone, but now the 110 zone is going to be resistance. Along with the 38 fib retracement of this swing move up. The weekly pivot was also right at the 38 fib retracement last week. And price has fallen lower than the monthly pivot. So we'll see where the new monthly pivot is for next week. It's likely going to move down to the 110 area. So on the weekly time frame, it's looks like a bearish close within the previous week's candle, like a harami, and could be a bearish harami, but it could be further consolidation for next week. All right, so also depends on the US non-farm payroll report, where looks like for the short term, there is also a ascending triangle with the 110 providing resistance and this rising trend line as support. It needs to drive through the 110 and target these swing highs and higher. Otherwise, if it does fall, there is a key support at the 62 fib, just above 109. All right. So critical week for US dollar, of course. Okay. So do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.